Hi, I'm Mark Fiedler with the Mark and Sheila Real Estate Team, and I'm here with the weekend update for the Rio Rancho real estate market. Previously, we reported on the federal government's $8,000 tax credit for first-time home buyers. This program was created as a method of encouraging additional home purchases and to combat the effects of tightening of the mortgage credit markets. Basically, first-time buyers who purchase a personal residence after January 1 and before December 1, 2009 may be eligible to receive the tax credit when they file their income tax return. Now, part of the American Recovery and Reinvestment Act of 2009 allowed states to create programs to utilize all or part of the federal tax credit to help with the down payment or closing costs. Until recently, there were only a handful of states which enacted such a plan. On March 31st, New Mexico announced its own version called the Tax Credit Advance Loan Program. Governor Bill Richardson urged New Mexicans to take advantage of the offering, saying, "During this time of unprecedented economic and social challenges, we are seeing that there are indeed opportunities for working New Mexicans to realize the American dream of owning a home. New federal stimulus money, existing affordable homebuyer programs, and low housing prices have come together to make this a great time to buy a home in New Mexico." End quote. In a lot of cases, the hardest part for a first-time buyer purchasing a home is saving the down payment and closing costs. As the federal tax credit does not show up until after the purchase is complete, that money couldn't be used to help buy the home until now. The program is administered by the New Mexico Mortgage Finance Authority and can only be used with a 30-year fixed-rate MFA first mortgage loan. For a short overview of the New Mexico MFA and some thoughts about how their offerings might differ from other mortgage programs available to first-time buyers, we went to Lynn Tabbitt, a loan officer at Legacy Mortgage in Rio Rancho. Lynn was New Mexico's MFA mortgage loan originator of the year in 2007. And Legacy Mortgage was the 2008 Lender of the Year for the MFA programs.
Hi, my name is Lynn Tabbitt, and I wanted to speak to you today about the New Mexico Mortgage Finance Authority loan programs. It is a state entity providing financing to help New Mexico families of low and moderate income households to purchase their first home. The New Mexico Mortgage Finance Authority has purchase price limits and income limits that need to be verified. The state has had this program since 1975. When compared to other currently available mortgage interest rates, the New Mexico Mortgage Finance Authority can be slightly higher, being from 5.1 to 6.4 for a 30-year fixed rate, depending on the type of loan that you're considering. FHA rates are currently at 4.875 to 5 on that same 30-year mortgage. The New Mexico Mortgage Finance Authority funds these loans by selling bonds once a quarter, and then the money is available until it's gone. The last funding that they had was approximately in the springtime, and within 3 days, half of it was gone. Once you decide to buy and purchase a home, you need to get with your loan officer to reserve funds on your behalf once you've selected a home. Not all mortgage companies can do the NMFA loan, so please check the New Mexico website for those programs.
So what is the Tax Credit Loan Program? The Tax Credit Advance Loan is a 30-year fixed-rate second mortgage loan that provides the borrower with deferred principal and interest payments through June 30, 2010, provided that the loan is paid in full. If the loan is not paid off by the end of June, interest will be charged from the date of closing. There's no prepayment penalty. Tax Credit Advance Loan limits are 8% of the purchase price of the home or $6,500, whichever is less. For homes over $80,000, it would be the $6,500. Also, the loan may only provide the actual funds needed to cover the down payment and closing costs or to reduce the principal balance. The money may not be used for anything else like appliances, moving costs, or furnishings. Additionally, the combined loan-to-value may not exceed 105%. Properties must be owner-occupied, single-family attached or detached residences only, including manufactured housing on a permanent foundation. Borrowers must complete MFA-approved pre-purchase counseling prior to closing and must also meet the program income limits. The following amounts are gross income figures before taxes. In Bernalillo, Sandoval, Torrance, and Valencia counties, the income limit for a 1 or 2 person household is $55,900. For a household size of 3 persons or more, the limit is $64,285. There may be a few exceptions to these limits. In these counties, the purchase price limit is $237,031. After loan closing, the homebuyer may file for the federal first-time homebuyer tax credit and use the tax refund to pay off the tax credit loan. As long as the loan's paid off before June 30th, there will be no interest on the loan. If the borrower chooses not to pay off the tax credit loan by June 30, the loan will convert to a 30-year fixed-rate second mortgage that requires a monthly payment. The tax credit advance loan program may only be used with first mortgage loans originated under MFA's Mortgage Saver program. You cannot use it with any other first mortgage programs, and you cannot use it at the same time as other MFA down payment assistance programs which create a second mortgage. The $8,000 tax credit stimulus program has been successful at increasing home sales in the lower price ranges in most markets. However, the move-up market has continued to be on the sluggish side. Real estate industry trade groups have been pushing the federal government to expand the program so that all home buyers of a primary residence will receive the credit, and to increase the amount to $15,000. They'd also want to remove the income cap of the current program. Recently, Senator Johnny Isakson, a Republican from Georgia, introduced legislation that would do all of these things. Isakson states that the current $8,000 tax incentive is insufficient because it misses a second set of buyers who are essential to a housing recovery. Quoting him, "We don't have a recession in first-time home buyers, we have a recession in the move-up market." End quote. The legislation aims to convince these move-up buyers that, despite falling real estate prices and job losses, now is the time to buy that larger house. According to Jim Gillespie, CEO of Coldwell Banker, many such buyers remain on the sidelines because they're concerned that if they buy a home today, it could decline in value in the future. Jim thinks that a $15,000 tax credit would take that concern off the books. Mark Zandi, chief economist at moody'seconomy.com, thinks Isakson's plan would have a meaningful impact on the housing market. The problem, of course, is funding. Congress is not currently convinced that the public will support a bailout at this time, even one that goes directly to the average taxpayer rather than to banks or large corporations. Frankly, I agree that passage of the bill would have a positive effect on home sales and all the dozens of related industries. It's the effect on inflation, taxes, and what would happen when the stimulus plan ended that concerns me. It's a complex question that unfortunately is to be decided by the House of Representatives and the Senate in Washington. Let's all hope they get good advice from some smart people and that they take it. Well, that's our report for today. If you missed some information covered here, you can find a copy of this program and past programs on our website, markandsheelateam.com. If you have real estate related questions which you'd like answered on the air, email them to us at info@markandsheelateam.com. We'll be back soon with more on the local real estate market. Take care.